Hi everyone, and welcome back to 1 Month in 1 Minute, a look back at trending headlines and what it means for your money. So May was actually a pretty good month for investors. If you just look at the major stock market indices, things looked great. Stocks moved higher, the market hit new highs, and once again, technology companies and anything related to AI continue to lead the way. Strong corporate earnings also helped, and by the end of the month, the S&P 500 had posted a solid gain. So on the surface, it felt like the market was cruising along. But here's where the story gets a little bit more interesting. Underneath those strong returns, there were really two themes that investors were paying close attention to. And those are ones we've seen before. That's inflation and interest rates. So let's start with inflation. Inflation came in a little hotter than many people would like to see, and higher energy prices were part of the reason. Now, inflation isn't just something economists talk about on TV. It's what me and you experience every time we buy groceries, pay an insurance bill, fill up our gas tanks, or even see healthcare costs rising. And when inflation stays stubbornly high, it can make investors a little more nervous about what comes next. And that brings us to interest rates. So during May, Treasury yields moved higher as investors started adjusting their expectations for when the Fed might begin cutting rates. In other words, the market became a little less confident that rate cuts were just around the corner. At the same time, tensions in the Middle East created additional uncertainty and pushed oil prices around. And that's important because when energy prices rise, investors often worry that inflation could stick around longer than expected. Now, higher interest rates aren't necessarily all bad. On one hand, they can create better opportunities for savings accounts, bonds, CDs, and other income-producing investments. But higher interest rates can also put pressure on existing bond prices and create more uncertainty about where the markets go from here. So, what should investors take away from all of this? Well, for me, the big takeaway is that May was a reminder that markets and the economy don't always tell the same story. Stock markets had a strong month, but there are still things going on underneath the surface. And that's why diversification still matters. It's why having cash available for short-term needs still matters. And it's why your financial plan shouldn't depend on any one sector, theme, or investment being the hero forever. Markets can change quickly. If you'd like to talk about what any of this means for your portfolio or your financial plan, we're always happy to help. You can schedule time by giving our office a call or by visiting caserta-dejong.com. Thanks for watching, and we'll see you next month.